Welcome guys to Good Fruit Investors. Today we're talking about volatility. So what is volatility? The simplest way to explain it is it just monitors price movement. So if a particular stock has the likelihood of being able to dip significantly, another stock may, on the other hand, not have as much of a dip. And so you would say to something like that, well, this one in particular here has more volatility than something that doesn't have that movement. And so the easiest way of looking at something that doesn't have any volatility would be looking at something like if you had a loan. If you were to give out a loan, you could simply look at that as, your return is simply going to be what the percentage of interest is on that particular loan. And so for sure on a regular basis, this is the percentage of return that I'm going to have. And so that's why a lot of people, when they're looking at their portfolios, they get into things like bonds, and they get into maybe ones like treasury bills, or they might get into other types of bonds like corporate bonds. And that's where they can have that diversification and lower that risk rate. And then when they look at things like different stocks, there's a lot more things that are going on in the stock market. So if I was to look at a business, there's so many competitors with different types of businesses. They have all sorts of different types of economical concerns that they're looking out for. They have different things that they need to pay attention to with how they grow their company. And so there's a little bit more exposure to the potential rises and falls of a particular business. It's not to say that, bonds are, not going to ever take a hit, because depending on the way that you invest in bonds, you may actually have a bit of exposure as well to the rise and the fall in interest rates. But that exposure is very limited. And so having a diversification of different types of asset classes and looking at things a different way, you can actually help to reduce that volatility. And for those that are maybe just getting started with investing, that volatility really does play a huge role psychologically. Especially what I've found is in the earlier stages of investing. And that's just because you've worked so hard for that money. And then by the time you actually go to put it into the market, when it starts going against you, you really can actually feel the effects of that. But when you have had your investments in there for a longer period of time and they start to rise, and then when they do have a pullback, it doesn't necessarily affect us as much the same way. And then also too, when you have more time in the market, more exposure to what volatility is, just because you can start to see different cycles and you're used to going through the ups and the downs, you have a different perspective on that volatility. So if you're fairly new to investing and you're just trying to figure things out and you're wondering what you can do to experience what it would be like to have that volatility, I highly recommend maybe setting up like a paper trading account at there's so many of them online. I know that things like Interactive Brokers or different ones, they have free trading, free accounts where you can actually set up those paper trading accounts. And it's just a great way to be able to learn how to invest and just get exposure and just get familiar with that volatility. Because volatility does exist in the market. And so I don't want to see anybody just, getting caught in, and what I find is this pipe dream, believing that you're going to have some kind of crazy returns, things that you'll see on like TikTok or different types of things on YouTube, where they promise all sorts of different returns, but they don't talk about the volatility and the drawdown and the psychological effects of that. And so just really having a healthy mentality on investing is so vital. It's so important. Knowing that volatility exists and knowing what kinds of investments you have to either increase or decrease that volatility. So I hope that was an encouragement for you today, and looking forward to talk to you guys in the next episode.